Hello, everybody. A warm and very welcome to all the participants to this webinar co-hosted by Making Finance Work for Africa Secretariat and the European Investment Bank on the topic Africa Financial Sector in the Post-Pandemic World. I am Hugues Kamewe Tsafak, the Acting Partnership Coordinator for Making Finance Work for Africa. The theme of this webinar is timely as we reflect on some of the challenges and opportunities that the coronavirus pandemic has brought to the fore. Drawing on the finding of the 2021 Finance in Africa report released in November last year by the European Investment Bank, the webinar will shed light on the recent development and future trend in the continent banking sector. We are very grateful to our eminent panelists who have agreed to share with us their insight and perspective on the topic, and we also extend our appreciation to their respective institutions, namely the Bank of Ghana, the Center for Global Finance at the University of London, the Overseas Development Institute, and of course the European Investment Bank. Before we delve into the topic of today, we would like to show you a bit, share with you the outline of these sessions. We'll go over the housekeeping information and then quickly present you Making Finance Work for Africa. We cannot miss the opportunity. And before we really move into the presentation and then the panel discussion. Next slide, please. For the housekeeping informations, you can see today's session is scheduled for about 1 hour and 15 minutes, including the Q&A. And for the good quality of this experience, all participants will be muted. You are anyhow given the opportunity really to submit your question through the chat and the Q&A box. The slide and the recording will be made available to you after 72 hours, which means 3 open working day, and also made available on our website, mfw4a.org. The message, if you encounter any difficulty to connect to the platform, please send a message to the organizers and we will really help you. And finally, we invite you to fill in the questionnaire that will appear automatically at the end of the session. Now we come to Making Finance Work for Africa. It's a multi-donor initiative hosted by the African Development Bank and launched in 2007. We're a platform for facilitations and promotion of financial sector development, and we usually work through 3 main tools: advocacy, knowledge sharing, and networking, and we also do a bit of project brokerage. Our ultimate objective is actually to bring together development, the policymaker, private sector, and development partner to unleash the potential of financial sector in order to achieve a sustainable and inclusive economic development of the continent. To do that and carry out our activity, we have always benefited from the general support of some of our partners, which comes alongside the African Development Banks and include the Afrexim Bank, the European Investment Bank, and the European Union, the Agence Française de Développement. We are very grateful for their continued support to Making Finance Work for Africa. Next slide, please. On that, I would like now to invite Mrs. Barbara Machito, who is the head of Country and Financial Sector Analysis at the European Investment Bank, to give her opening remark. Barbara, you have the floor.
Thank you very much, Hughes, and good afternoon, everyone. I'm really delighted to be here today with our friends from Making Finance Work for Africa, and also with a great lineup of speakers. You will hear very shortly from Claudio about the main findings of this report, which is the 6th in a series, and that last year really looked into how financial intermediaries from banks to microfinance institutions and private equity funds have coped with the pandemic. And I would really like to thank very warmly Making Finance Work for Africa for the great support that they have given us through all the stages of the preparation of this report. I don't want to spoil too much, and I will let Claudio illustrate the details, but what we have seen, one of the key messages is the considerable resilience that we have seen in the financial sector, despite the lockdowns, despite the unprecedented crisis that the African and the global economy was facing. However, as we move into much awaited post-recovery, post-crisis recovery, we have now many new more challenges looming at the horizon. And I think this is a great opportunity that we have today to discuss the trends, the challenges, but also the opportunities. Let's not forget that there are many opportunities ahead of us. And this is very important also as we have just launched the work for the 2020 edition of the report, and there is a lot that we want to tackle in this new edition. So I will not take too much more time. I think I would stop here and let the floor to Claudio, and wishing you all a very insightful and productive exchange today. Thanks a lot.
Thank you so much, Barbara, for this introductory comments. In Making Finance Work for Africa, we really value this collaboration with the EIB. It covers various areas of work. We have this report that we have been collaborating, as we mentioned, but there is also the technical assistance program that you are having for West and Central Africa, where we have been doing some good work together, and we really want to continue and expand this area of collaborations. Certainly, the new report that's coming up will also give us another opportunity really to do very good work in and come up with a really high quality knowledge product. So as you see, today I'm the facilitator of these conversations, or the moderator. We have with us a number of, as I said, eminent speakers. We have with us Dr. Elsie Ado Awazi, who is the second deputy governor at the Bank of Ghana. Before joining the Bank of Ghana, she worked with the Ghana Security Exchange Commissions and was worked also with the IMF Legal Department. So she's bringing here more than 20 years of experience in financial sector development. We have with us also Professor Judith Tyson, who is a research fellow at the Overseas Development Institute. Judith has been very active and it's well-known researcher. She has covered a number of research thematic, and she has also been covering a number of countries. Actually, she works in a number of countries in Africa: Kenya, Nigeria, Zimbabwe, Tanzania, Rwanda, even Cote d'Ivoire. She was there. We also have with us, and I think maybe just to confirm, we're supposed to have Professor Morendi, who is the Global Finance and the Director for the Center for Global Finance at the University of London. I know Professor Morendi from the time he was at the African Development Bank as the Director of the African Development Institute. So there's not much you can say. I mean, their bios speak by themselves, and we know they will bring very insightful views that will really help to drive these conversations. We also have with us Claudio Cali, who is an economist with the European Investment Bank. Claudio was also very active and involved in the preparation of this EIB, this Finance in Africa report. And he has therefore been, he has offered to present the report with us. So I will now invite Claudio really to give us a taste of the report. Claudio, you have the floor.
Good afternoon and good morning, everybody. And many thanks for the Making Finance Work for Africa to organize this webinar. So I'm really happy to be here and to present some of the key findings of the Finance in Africa report. Let me just remind you that this report was also on the views and on a survey of approximately 80 banks across sub-Saharan Africa. We collected these responses basically in early 2021, so really at the time when the impacts of COVID-19 were beginning to crystallize. Next slides. Basically what we observed, and as Barbara already anticipated, the COVID-19 financial sectors in Africa showed were resilient throughout the COVID-19 pandemic, and this was also thanks to decent capital buffers, but also to the support that came from policymakers. And in fact, responded banks drew on government guarantees to deal with crisis and the impact of crisis, and many put in place moratoriums and restructuring as well. Next, what we also saw is that it is true that the financial sector is sound and stable. However, we also noticed that some categories, some sectors are still underserved, and this is the case of the small and medium enterprises that are still suffering from a lack of appropriate access to finance. And when asked banks what was constraining this access, this lending to SMEs, they pointed out to what we already knew, which is basically lack of sufficient collateral, poor credit history, or the inability to structure bankable projects. And in this slide, you can see that also this compared to with the corporates. In fact, the same points, they're not basically concerns for when it comes to corporate lending. So all in all, SMEs remain still constrained, underserved, and this is a structural barrier that was also further exacerbated via the COVID-19 pandemic. Next slides. The survey also, what we did in the survey was also to cover some aspects and themes which are gaining momentum in the continent or also elsewhere. One of those was the green finance, and I invite you to also look at the chapter in more detail, because this was developed also with Judith from the Overseas Development Institute. And what we found out here is that the banks are across the continent are seeing green finance as an opportunity. They see also that there are challenges, and are aware of the exposure that some of these banks of their portfolio into some assets that soon might get stranded because of climate change risks. However, on the other hand, still less than half is allocating staff to these issues, like in terms of assessing climate risk, was also dedicated on renewable energy products, and only basically less than 30% is able to, and is actually factoring climate risks into the loan pricing process. And when asked what was preventing them from doing more, a third of banks indicated that there was like a lack of demand, which is followed up by a lack of expertise and also models and data to assess climate risk and to properly factor them into the lending process. So all in all, what we see is that the green financing is gaining momentum. However, there is still a need to fully exploit the potential. So, and we need probably additional enhancement from the in terms of like the ecosystem, putting together a proper environment to let green finance flourish. Next slide. Another topic that we touched upon in our reporting in the survey is the digitalization of financial services. Again, this is something that Africa has always been a front runner in this. But what's interesting is that all this movement began with the non-banks sector, mostly driven by telecommunication. And it really made an impact in terms of like financial inclusion and providing credit, reaching underserved market, be it women, youth, or smaller companies in remote areas. But what we saw thanks to the survey is that also banks have embraced digitalization because of the pandemic and prolonged lockdowns. The majority thinks that this shift will be permanent. And the reason why there was this improvement was primarily to satisfy customer needs. So this is really a customer-centric approach. First of all, of their current customers, but also to attract new customers. On the other hand, of course, the digitalization also is bringing some risks, and the banks are concerned about cybersecurity, which was like the biggest concern for almost 70%, over 70% of banks. But also IT infrastructure, which requires and might need further improvements. Another concern that is not here, it was like the third biggest, is also competition from telecommunication. Next slide. I think that like I hereby presented like some key findings based on the survey. And I just wanted to point out also some challenges and trends that we are already experiencing, and they will affect financial sectors in Africa, but also in emerging and developed economies. Well, first of all is the uncertain macroeconomic outlook and the uncertain macroeconomic situation, because with the Russia-Ukraine war, increasing commodity prices and also an inflationary pressure which is mounting, this might have negative effects, first of all, on the financial flows coming into emerging markets and developing markets, but also on the asset quality of banks that might be impacted. Another interesting theme, as I said earlier, is digitalization and tech. And besides what I presented, there has been like a rise on cryptocurrencies. And again, here it would be interesting to understand better and to start grasping what might be both the opportunities in terms of like financial inclusion, but also the risks that are associated. And another topic here of great interest is also how is going to go the relationship between banks and fintech and big techs, because so far they've been like cooperating, but as they begin targeting the same markets, they might start also competing amongst each other. And finally, green finance. I'm sure Judith will have lots to add on this, but again, from our findings, what we saw is that the financial intermediaries are ready, they're expressing interest, they're getting they're acquiring staff, but the ecosystem is not fully there yet. So what is needed to strengthen this ecosystem? I'm gonna stop here and I'm gonna hand over to you. Thank you.
Thank you very much, Claudio, for this very this high level overview of the main findings of this report. I must admit that I mean the survey really came up with very interesting result regarding actually how the bank really managed to play their role in that very difficult circumstances, helping really to mitigate the unprecedented macroeconomic and financial shock that were caused by the pandemic, and by notably maintaining critical financial services that were needed to support our economy while also managing the risk. What I would do offer that I will invite the panelists, the two panelists, starting by maybe I need to mention it. We have not managed to have Professor Morendi on the panel. He might join, we don't know, but we're trying. But so we'll start with Dr. Edsi. If she can just give about 3 minutes what she's taken away from this presentation. You have the floor.
All right, thank you, Hugh. So that was an excellent presentation by Claudio. Most of the findings, if not all of the findings, are findings that I can relate to from my position as a central banker and regulator of the banking system. You would find that some of the findings are more pronounced in one African country or context than the other. But we share a lot of similarities. And so it's fair to say that these are findings that I can relate to. As we know, the pandemic hit the real sector real hard on account of all of the restrictions that were put in place, necessarily so to curb the health risks that we faced. But as a result, we found out that the banking sector was very much at risk as a result of the fact that they had loan assets held by the real sector, and depending on which sectors of the economy were badly hit, their balance sheets were going to be in trouble. We also saw that fee income for banks had dwindled all of a sudden, especially in our country that is, and in a lot of African countries that is import dependent. You began to see that with the restrictions, you had fewer imports coming in. As a result, trade-related fees that banks were accustomed to were also going down. And then you saw that governments were also beginning to face the exit of foreign investors, particularly the portfolio investors in domestic government bonds, as a result of which we were beginning to see mass outflows of investment, and the need for government then to find new sources of funding for the additional expenses that they were undertaking, both in terms of mitigating the health risk, but also to provide some fiscal stimulus to the economy. And so we saw a lot of policy responses, both from the fiscal authorities as well as the monetary authorities and regulators, all aimed at stabilizing things and also providing more liquidity into the system and helping borrowers continue to operate loan accounts without necessarily being declared as non-performing, and so on and so forth. What we have found at the same time is that banks' business models needed to change, the operational arrangements needed to change to be able to continue to provide access to banking services through the help of technology, with its attendant increase in risks such as cybersecurity risks and fraud, AML, CFT, even because at the same time, regulators, for example, the Bank of Ghana, had to extend daily transaction limits to allow for more use of mobile money related transactions or electronic financial transactions more generally. And so you saw that with, what do you call it, having to change the rules of the game by allowing more transactions to be done with the minimal KYC rules that were in place, you saw increased AML/CFT risks. But it is fair to say that regulators across have fairly managed to address the situation and the risks that we faced immediately, and have managed to stabilize the banking system so that we didn't see as many MPLs, for example, or we didn't see a lot of solvency related issues, for example. What we have found though is that a lot of the stimulus that went into the system and the regulatory reliefs that were provided by central banks and regulators have not necessarily translated into as much additional lending to the real sector to help with economic recovery efforts. And there are reasons for that. One is that, the demand for loans itself, went down. Many players in the real sector were not looking for new loans. They were looking for loan forgiveness or loan moratoria, for example. And so it was very few sectors of the economy, for example, in Ghana, the pharmaceuticals and the textiles industry that were producing masks and garbs for frontline health workers that were borrowing. And that constituted a very small amount of demand that would usually be present. And so we've seen banks also then move away from lending to the private sector to lending to governments, because governments have had to deal with larger fiscal deficits for which they haven't had much access to international markets, to fund. And so the banks have sort of reorganized their balance sheets and lent more and more to government, to make up for the income gaps, but also to really, while away the time, if you will, while the private sector picked up and began to demand for more loans. From a regulatory standpoint, we think things are fairly stable. Although I must say that we're cautiously optimistic because a lot of our examiners were not able to go on site to examine the books of banks in the midst of the pandemic. And so while MPL numbers don't look too bad, we are not very sure about how eventually the losses will play out. So we're keeping ourselves very cautious about that. And then the fact that the banking sector's exposures to government are growing as a result of them having to buy more and more government bonds. We're beginning to have conversations about how they could recalibrate their balance sheets, the asset side of their balance sheets, and lend more to the private sector when the demand is effective. And then, as you mentioned, Claudio, the recent geopolitical risk as well that are impacting oil prices, for example, and other asset prices. If you add on the fact that inflation in advanced markets keeps rising, and advanced central banks are already taking measures to increase the interest rates, you see another wave of shocks coming where banks are likely to take further hits. And so we're being very vigilant and also improving our cross-border cooperation within the region, because a lot of the banks that operate here are Pan-African in nature. And so we are certainly speaking a lot more with our counterparts in other countries across the region and ensuring that we're all on the same page in terms of how these risks are identified and are managed. I won't go into climate risk and others because I think other panelists will go into, but those are very real risks as well, not only from an opportunities standpoint, as Claudio said, but there are real risks that are already impacting the banking sector. And so that there is certainly the need for a lot of work to be done there. Thank you.
Thanks a lot, Deputy Governor, for this very insightful enlightening comment. I will now give the floor to Professor Digitalisation also to reflect on the presentations. You have the floor.
Yeah, thank you very much, Liz. Yeah, I think, you know, if we think about, in particular around climate risk, but both Elsie and Claudio mentioned it, you know, we're in a situation in Africa where the region is seen as being the most exposed to climate risks, and particularly in infrastructure in urban areas where there's potential exposure to extreme weather events, but also, of course, very importantly, agriculture and the potential impact on the agricultural sector has been quite negative, and it's, of course, also an area where we have some of the most vulnerable people in the region in terms of their ability to manage their livelihoods as climate change gathers pace. It's also, I think, a difficult policy situation for the region because at the same time as needing to manage climate change, there's also, of course, a need to continue with economic growth. We see many countries where economic development is already constrained by finance. The net outcome of that is really that we're seeing a significant gap in terms of the level of finance and of climate action across the region, and that needs to be addressed quite urgently. I think one of the questions that I was asked was, you know, what can be done around that? I think it's probably quite important that we think about climate finance in quite a holistic way for the region and think about the multiple types and sources of finance that could be tapped and that are complementary to each other. And when we think about those different sources, how they can be applied in a way that's quite judicial and as efficient as possible. You know, if you think about that landscape, there is, of course, significant public finance, and we're seeing many of the large DFIs are internationally reorientating towards climate finance, and especially that overlap with economic development, where there's also, you know, focus on, for example, infrastructure, but green infrastructure that's climate friendly. We mentioned, of course, other sources of finance, particularly climate funds. I'm sure some of you have been following the COP26 discussions about accessing climate funds for the region. I would say the outcome was disappointing from COP26 this year. There were some improvements, but they were rather minor, nothing particularly significant for Africa. We have to hope, I think, for COP27, which was going to be hosted by Africa later this year, to be you know, more positive and have more focus on the region, on their needs. But when we think about the private sector, you know, private finance as well, of course, there are multiple sources. Elsie mentioned, you know, the need to green the financial system, but also for the banking sector to provide finance for the greening of the economy. There's other sources of finance, I mean, particularly green bonds. We've seen a moderate but notable number of issues in the regions, both from national governments, but also from cities to finance green developments. It's an area globally, of course, that's seeing exponential growth and significant interest from investors right across the world. It would be great to see Africa tapping into that, either through their domestic capital markets, and of course, a number of central banks have already opened you know, green bond sectors and are supporting the development of the green bond market in their national economies, but also internationally, where in some of the major capital markets, as I mentioned, there's a lot of appetite. And I think we've seen some interesting developments in that regard, including issuers in Africa who might not be able to issue vanilla bonds, but have been able to issue green bonds because of that focus on that investor class. I'd also just mention the need for innovation as well in Africa. We're seeing certain areas where it's difficult to finance, either from public finance or from major private sources of finance. But we're seeing some interesting things. So, for example, in the biodiversity space, which is quite unique to Africa, we're seeing specialist funds or philanthropist funds being set up that are helping to some extent in that region. We've also seen some curious things like diaspora bonds or crowdfunding bonds. They tend to be quite small scale, but they're often quite focused on particular needs. So, for example, in urban areas, we've seen some of these issuances. So we need to keep an eye on that, you know, for particular targeted areas. The other thing I think we need to mention, I said we need to look at many multiple forms of finance, and we need to be targeted about where they should be directed. If we look at the needs for climate finance, there's quite a mismatch, particularly with the appetite for private investors and where money needs to be applied. So we tend to see great appetite from investors, for example, in the energy sector, where there's particular quite notable assets with income flows that are suitable for creating financial securities. But if we contrast that with other areas, so for example, quite a lot of adaptation, or the movement in the agricultural sector or the biodiversity space, which I just mentioned, has relatively limited and possibly, fundamentally limited appetite for private investment. So that seems to be where we should be directing scarce public finance in order that all of the needs are met on the basis of needs rather than on purely the attractiveness from a financial perspective. Let me just mention just a final remark. Claudio took us through the survey. I think it's quite interesting. Clearly, the financial system is starting to orientate itself around the green agenda, but it's only at the initial stages, and it would be great to push that along. As Elsie mentioned, of course, there's many other priorities in the region, both recovery from the pandemic, but also as the implications of the war in Europe are filtering out to the global economy, particularly through commodity prices and inflation. So there's many other kind of pressing needs, but it would be also good for the banking sector in particular, to keep that in mind in terms of making sure that they're not left behind on the foot in terms of greening the financial sector. Hugh, let me finish there.
Thank you so much, Professor Judith Dyson, for this comment, and really was already covering some of the concerns that are related to green finance and climate change. I mean, there are a number of questions that are already posted there by the participants that are related. So you in advance already responded.
Yes, I'll to the questions.
Yes, excellent. Thank you
so much.
I'll go back to Dr. Elsie. And before this pandemic, Africa was really had a long period of sustained growth, remarkable growth. It has really made a big footprint in terms of poverty reduction. And then the pandemic comes, and the outlook was really pessimistic. But the predictions actually did not realize the way people were thinking the economy will collapse. And at the end of the day, we'll say that our African economy was quite resilient. And it's good to understand from where you are sitting what's actually explained that the capacity of African economy to withstand the pandemic shock. And maybe you can also just elaborate also on how the effectiveness of banking regulatory response during this pandemic. So the floor is yours, Dr. Elsie.
Thank you. I'm going to try and respond from the various angles as I'm about to leave the line in a few minutes for another meeting. But thank you. So yes, the predictions were quite severe, but you have to remember that the health aspect of the pandemic, itself was not as severe in Africa as had been feared, and therefore the economic impact that could have been, didn't quite play out. I mean, there's been quite a significant economic impact, but not as bad as could have been. And so, thanks somehow to the fact that we were quite we didn't suffer the worst of what could have been in the pandemic. I like to say that some of the measures that were put in place very early on helped a lot in that regard. And as a result, we find that although we had, very severe impact economically, it could have been worse, and we're thankful for that. But let me say that on the financial system as well, again, we didn't see the worst impact, which is a real, it's a real blessing. But as I said before, we need to be cautiously optimistic because we don't know yet. Many supervisory authorities across the region have not been able to do on-site examinations of financial institutions they supervise. And from a supervisory standpoint, as much as you can do with off-site examinations, you're never quite sure when you haven't actually gone to the institution, particularly to examine their loan books. We, for example, tried to do off-site loan book reviews, but the sheer impracticality of that exercise, where you're dealing on one loan, dealing with multiple papers, some of which you cannot upload easily when you don't have good internet connection, between the bank and the regulator and all of that. And so there are just sheer practicalities that didn't make that very effective. And so we're waiting to be able to actually go on site to do some deep dives and see what losses may have occurred. And so one needs to keep that in mind. And then also, depending on which country you're dealing with, certain banking systems were stronger than the other. For example, in Ghana, we had undertaken a massive banking sector cleanup starting from 2017 to 2019, and closed 9 major banks, over 23 savings and loans companies, and over 300 microfinance companies that were very insolvent, and had locked up a lot of depositor funds in there. We had managed to clean up in a way that did not result in a systemic banking crisis. And we got the banking sector to recapitalize. We didn't even know there was an impending pandemic. And so at the onset of the pandemic, the banking system was already standing strong and therefore had additional buffers to be able to withstand the shocks. So that's an important thing to keep in mind. One needs to keep in mind that in Africa, there are also very small thrift institutions, savings and loans, microfinance institutions that help to deliver access to finance to the bottom of the pyramid, if you can say that. Poor households, MSM, medium, micro, small and medium-sized enterprises. A lot of these institutions are not standing very strong. And so one needs to keep in mind that there may be at some point in time the need for interventions to somehow reform these institutions in a way that can make them more able to deliver on financial inclusion going forward. In particular, in these days that where technology is playing a big part in the business models of financial institutions, they may need to be recapitalized, consolidated one way or the other, so that they're fewer and stronger and better able to do the work they're licensed to do. Let me say that in terms of what the regulators did in the region and the effectiveness of those measures, again, evidence shows that these measures helped with liquidity in the banking system. It helped for banks and other financial institutions to restructure the loans of their borrowers who were struggling as a result of the pandemic. And then, what you found that there wasn't very effective is the fact that you didn't see as much increase in credit in lending to the private sector. But that's not entirely the fault of the financial system. It's also because demand for loans was low. And at the same time, banks have found a good asset, to put their money in the form of government paper. And so going forward, as the economies of Africa begin to recover a little bit more, there will be a higher demand for loans. We would expect banks to reorganize their portfolios and lend more to the private sector in a prudent way. And we do hope that they're able to migrate in a way that does not disrupt also the debt markets in Africa. And then one needs to think more of resilience, going beyond stability. How do you ensure that there's medium to long-term resilience in the financial system and in the economies of Africa? And what role can the banks themselves play in helping to create more resilient African economies? Our stress, we run a lot of stress tests on the banking sector every month. And again, if we don't have other waves of the pandemic, we do hope that ultimate losses are not too high. But then one needs, again, to be cautious. But then when we talk about inclusion, not just stability, we talk about how inclusive is the financial sector in Africa. That's a whole different question. We still have a lot of people outside the financial system, especially women, and then youth. Our populations are made up largely of youthful populations, and yet they don't have access to jobs, don't have access to finance to start create a business. Women are lagging behind by about 9% in the region. And also the youth and women could actually be change leaders when we talk about migrating to a greener economy in Africa, and yet don't have access to finance. We also have the African Continental Free Trade Area now that has created a single African market with vast opportunities to be exploited. So access to finance becomes very critical for us to actually create more resilient financial systems. The banks and financial institutions themselves must have a pipeline of clients going forward so that they themselves are ultimately sustainable, but they must also help to shape a more sustainable and resilient economy for the region. And so I do hope that all of the stakeholders in the ecosystem across the region will continue to work together to find common solutions. And we do appreciate all the support we get from the AFDB, the EIB, and others in this regard. Thank you very much.
Thanks a lot, Dr. Elsie. Yes, again, it's very insightful and enlightening. You cover a lot of areas, and I think, yes, you responded to a number of questions that was already raised either in the Q&A box or in the chat box. That's very pretty helpful. Turn now to Professor Digitalisation, and maybe try to cover another area which related to this trend of digitalizations of banking transactions. You know, before the crisis, there was already a widespread adoption of digital finance across the continent, and the pandemic has actually accelerated the trend. So how do you see these digitalizations going forward, and the change that it might bring to the finances in Africa in the future?
Yeah, I think it's an interesting question around digitalization because, of course, we've already seen very significant uptake of digitalization for financial access in the region, and you know the outcome of that has been significant growth. I believe actually doubling over the last 10 years of financial access, and as Elsie mentioned, that's very important, particularly for people at the bottom of the pyramid who are able to support their livelihoods more effectively. I think that there's a couple of areas which you might want to highlight where there's deficiencies. In particular, there are, although some countries have made very significant progress in terms of financial access. So for example, Kenya is over 80% now, and there's a number of other countries that are close behind them. We are also seeing some gaps in financial access where we'd like to see more access through digitalization. So for example, a number of the low-income countries or fragile states tend to continue to have very low levels of access and associated high levels of poverty with that. We also see odd pockets of poor access, particularly in areas or regions or groups that are quite often marginalized. So some of the more remote areas, for example, rural populations, we tend to see women with lower levels of access. So it would be good to see a greater focus on improving access in that area. And as we mentioned, digitalization is kind of one of the key roles that has been successful and that could be progressed. It would also be good, I think, to see more focus, particularly on those marginal groups for ring-fenced funds. We've seen, as you said, there's some questions in the chat about SMEs. One of the policy approaches that have been quite effective for SMEs, for example, has been ring-fencing funds that are from various public sources, both international and domestic, but that are distributed through commercial banks, who of course can manage the credit risk and the actual distribution of funds to customers. It would be good to see that taking place, and particularly some of the larger institutions who have led that growth being more focused on the inclusivity of it. I think on the digitalization itself, though, I think what would be interesting going forward is the second wave of digitalization. So not about financial access, but about more wholesale digitalization of the financial system. So what I mean by that is things like we're seeing the emergence of electronic exchanges today, which are going to increase the efficiency, hopefully, of the financial system and have broader access and wider range of products, but within wholesale markets. We're also, of course, seeing digitalization within banks themselves and the greater use of Fintech technologies that are specific to wholesale markets. So it would be particularly useful, I think, to see that, Hugh, because of the issue around efficiency. Maybe I can just pick up on one of the questions here. It's highlighting the fact that lending rates, the question here, I think is from J.R. Rao, in Ghana are particularly high, but this is a persistent problem right across Africa, where we're seeing very high rates to retail customers and business customers. And of course, it suppresses investment. So anything that improves the efficiency of the banking system and that would then allow margins to be compressed would be helpful. And obviously, digitalisation is one of the key ways to do that.
Thank you very much. Thank you, Judith. Maybe I will try to stay a bit on the technology and maybe also try to hear a bit from you on the fintech. You know, the strength of development of fintech. I mean, it's a really, really dynamic industry on the continent for now. It's keep growing. People are talking about actually maybe harmonizations of regulation rate to make it more, create a more conducive environment for fintechs on the continent. But actually for you, what do you see? What do you think fintech is going to change in the landscape, financial landscape, and to make our economy more inclusive going forward?
You know, I think it's that issue about outreach that allows many more people to access it. But I think we're also seeing something really interesting happening in the region, which is about the digitalisation of the economy. Now, that's slightly different from kind of digital services, but it's been based on it. And I think both people's, you know, familiarity with mobile services of various types, and of course, the just access to it. I think if you include people who can borrow phones, you know, from kiosks and these type of things, there's areas where 70–80% people have access to mobile technology, and we're seeing all sorts of innovative new things emerging in the real economy on the back of that, and it allows people to have access to businesses that are relatively small as well. So it's almost like a sort of deepening of the small business economy right across the region, including in the informal sector, and I think that's kind of a key enabler of increasing the inclusivity of economic growth in the region. So I think that for me is the most interesting aspect of where we're seeing that digitalisation in the economy itself.
Thank you so much, Judith. There are a number of questions here that are related to private sector development. And maybe I will really invite here Claudio. Claudio, if you can come in and share with us a few words on the solutions, direct solutions that the EIB has really implemented to boost private sector access to finance on the continent.
Sure. Thanks, Sue. I think that it's quite, I mean, just to mention a few of those, I mean, Judith, Deputy Governor Elsie already touched upon those, and it's quite, you know, there are like a range of products that are already in place to support SMEs. Of course, we have to make use of these even more, since given this, first of all, like the pandemic times, but also the ongoing macroeconomic uncertainties. So first of all, there are like a number of credit guarantee schemes which are provided, and they're available sometimes from the institutions like international financial organizations such the EIB, but also public guarantees available from the central bank. The EIB has been stepping up the credit lines also towards the in the sector, credit line for banks, for microfinance institutions, specifically targeting SMEs. So and whereby the idea is like to offer first of all not only the financing, but also longer tenures and longer grace periods. So really trying to address some of the constraints that I also showed you earlier. Another thing that I'd like to touch upon is, of course, you know, we always think about the access to finance as providing loans. but oftentimes is also we have to think about like other instruments, and these are like, for instance, equity. We see rising across the continent of like venture capital funds, private equity, but especially VC funds, which are much more tailored to support the needs of startups, SMEs that are growing. So, and oftentimes these are like key for the development of new business, of business expansions or business ideas. And these are not only fintech, but this is all, it's across, you know, a number of areas, and trying to address a multitude of bottlenecks across the countries. And last but not least, and I think that also there, you guys, you're well aware, because you contribute with your expertise, is also the need to support via technical assistance and capacity building. What we mean by these is really trying to strengthen the skills not only of the financial intermediaries to cope with specific sectors, be it like SMEs or like underserved groups such as women, but also trying to develop skills also at the final beneficiary levels, because oftentimes it's not just a supply issues, but also demand. And this is extremely important nowadays, because also thinking about, for instance, digitalizations, I mean, there is an enormous wave of digitalization of financial services, health tech, but it's extremely important, and it's also raising the problem about like the knowledge gap. So oftentimes we're trying to promote financial inclusion, but what we end up with is like we might risk, there is a risk of financial exclusion because there is a literacy with regard to digital financial services. So this is something we're really, the IB is really active together with partners as well. And so it's really a combination of like a blending between loans, equity, and the financial instruments, and technical assistance component.
Okay. Thank you very much, Claudio, and really to alluding to this instrument that EIB has developed to scale up access to finance for and corporate on the continent. And as a lot of communications are really directed to this, the issue of private sector development on continent and access to finance for SMEs. I think this is an area that is critical. We heard from a comment that made by the deputy governors that during the crisis in the pandemic crisis in Ghana, for instance, we're expecting to have more high demand of financing or loan from the SMEs or enterprises, but that did not happen. They were actually more expecting moratoriums and other form of support. And that brings me to something on the continent. You know, the finance gap for SMEs, for instance, estimated above 300 billions, and it is growing years after years despite all effort. And sometimes the instrument that are provided, as Claudio said, it's not only the loans that are responses. We know that SMEs in particular need other form of finance like factoring, leasing, in addition to the guarantees that were probably mentioned. But clearly there's an area sometimes that is on the explore, which is also about the business, maybe the business environments, providing maybe the financial infrastructure that is required, like putting in place collateral registries, putting in place maybe credit bureaus and so on, that can really help. So my point here would be that we hear from Professor Judith Tyson. What is her perspective on the need to create a conducive business and investment climate to support economic recovery on the continent? What do we need to do? What is missing, for instance? You have the floor, Professor.
You'd like to, Richard, I think actually some of the chat comments I'm seeing here from Professor Nicholas and others quite interesting as well. I mean, one of the issues that we're facing at the moment, I think, is that we've had unprecedented uncertainty in the global economy. And I'm thinking, of course, about the pandemic, which, as Elsie was commenting, hasn't been as bad in Africa as many people initially thought. But we're now seeing significant disruption in terms of global markets. And of course, the most important area for that is in commodity prices. I think it's interesting to think about what will happen within the region in relation to that, because we also always see winners and losers when we see commodity price volatility, because depending on whether countries are importers or exporters. So there are certainly going to be countries that have a significant benefit from some of these events, but there's also those who are going to see significant pain, particularly around inflation for energy prices of various types. So when we set that against the question about SME environment, I think they're also facing quite a tough environment. And there's a number of kind of traditional answers about what can be done. So people talking about the growth of the SME sector, and for the professor's remarks, because he's highlighting what has actually been quite a long-standing lack of traction, where with firms that don't graduate from being relatively small informal firms into being larger, more formal firms, not necessarily large corporations, but this kind of missing of mid-sized firms that can be important for employment and that have important effects within particularly domestic economies, but also the regional economy. So I think trying to tackle that problem is one of the critical ones. I'll be interested to hear other people's views on this, particularly what are the opportunities for small businesses given the environment. But of course, on the positive side, there's also the African Free Trade Agreement that's coming into place, and there's some discussion around that, whether that will provide opportunities for regional growth and regional deepening, particularly from SMEs who can seek out regional opportunities rather than competing on the sort of global playing field with competition for places like Asia, for example, in manufacturing. So I wish I had a really good answer to that, Hughes, but I think it's a tough environment. We need to be thinking about it. The only other thing I would say, and I don't know whether I think this is true, but I know people who do, and it would be great if it was, but whether there's a third path for African economies where actually the importance of relatively small informal businesses in a digital economy will be much greater, and both in terms of livelihood, but also in terms of basic employment, and whether there's a different path from what has been the focus of most African governments, which is around strategies that look at following the Asian path into large-scale manufacturing and exports outside of the region. So it's possible that we may see different economic structures developing in Africa that may be more beneficial and more suitable to the economic environment that we see today. Let me finish there, Hughes.
Thank you so much, Judith. And
in the chat, if you agree or disagree as well, I'm watching with it.
Sorry?
I was just saying people would like to comment on that. It's interesting to debate
yes.
what those issues are. Yeah.
Thank you. Yes. And there are really good questions coming in the chat here. But we plan to have this more, give more time to the conversations, but we miss one of our panelists from the beginning, Prof Morendi, and then Deputy Governor Elsie has also to leave. She has other commitment. So I think we'll not exhaust the brain of the few panelists that remains here. If you allow me, I think we'll complete this webinar. I think that there's a very interesting remark that's made here, and we'll close with that, asking, given the disruptive role played by the conflict exacerbating the risk in the financial sector and multiplying the impact of ecological threat, what could be done to increase the role of bank and the private sector in building sustainable peace That's a very interesting comment. Actually, with the pandemic we entered was period of very uncertainty, great uncertainty. We thought that we were really now, we have moving out of the pandemic and the crisis, and we were really talking about post-recoveries of the things, and now we are entering probably another era of a time of uncertainty with the geopolitical tension that is happening in the region. So we don't really know what will happen, but clearly we know the African economy have been, as we said, the resilience, they demonstrate the capacity to absorb the shock, face the shock, cope with the challenges that were there. We saw financial sectors in Africa has been really able, as we say, to deliver the basic services, respond to the need of the society, providing funding for business and household when needed. They facilitated public support program and also economic stimulus. And without them, clearly, we would not have the stable economic that we are having today. All that to put the credit of banks and the financial sector on the continent. And what we also notice with the crisis that there is kind of evolutions in the way the banks are really, financial sector generally are really moving into this new normal. We can notice that they embrace more inclusive and innovative thinking, and they are really ready to harness opportunity in green finance and accelerating digital transformations. I would say that these webinars really provide us with a lot of good and insight, and that we will leverage this insight in process of preparing the 2022 edition of Finance in Africa report. I'm sure that the deliberation enlightened the path forward for the diverse African financial sector. On that, I would like to thank all the panelists for their contributions, the lessons that they share. We extend our appreciations against to the attendees for coming up with all these comments, so questions that really drive the conversations. We Making Finance Work for Africa are always very proud to have you part of our webinar series. We had about more than 130 participants at the time connected to follow the conversation, which is great. And we want to keep this momentum going forward. For my final word, I will recall that the presentation and the recording will be made available to you within 72 hours, so by Thursday. And we are grateful if you can take a few minutes to fill in the survey that would pop up automatically when you exit from the platform. On that, I will say again, thank you, and have a good rest of the day. Bye-bye. Thank you.
Thank you.
Bye.
Bye.